back at the same time, it's over. Enter China. Right, for decades, Western central banks were leasing their gold into the market to give physical supply and to keep the price suppressed. One respected analyst estimated that central bank gold leasing totaled over 10,000 tons as far back as 2002. That gold was leased to banks, it was delivered into markets, but a lot of it flowed east, into Asia, into China, into private hands, and it never came back. Western central banks were slowly bleeding their physical gold reserves into a market that was pretending those reserves were still on their books, which is exactly why China has been buying so much gold for the past decade. And they weren't just buying gold. They were buying the gold that Western institutions had been selling at artificially suppressed prices for 50 years. That's why we see gold moving from west to east, from unallocated to allocated, right? That is how the system worked until 2021. In 2021, the most powerful financial institution, the BIS, the Bank of International Settlements, aka the central bank of all central banks, was like, what are you doing, China? Why are you taking my physical gold away? I got a paper game going here, right? Why are you exposing me and my bros like that? So what they did was they changed the rules for how banks had to account for their gold positions. The rule change was called Basel III Net Stable Funding Ratio. It's a fancy way of saying banks now have to fund their gold positions with real money. You can no longer run the shell game the way they used to. Why would they do that? Because thanks to private investors and central banks in China, the paper shell game became too expensive, too regulated, and way too risky to continue the hustle at the scale, right? It became super risky because if the price of gold suddenly went up by a lot, and you're a bank sitting on a huge short position in gold, meaning you sold a lot more gold promises than you actually had gold, and the price of it suddenly went up, you were in serious trouble. So the BIS changed the rules to make sure Western banks got their gold positions on the right side of the trade. If you follow the logic, why would they do that? Is because maybe you expected the price of gold to adjust higher. And that is why gold has been replacing US Treasury bonds as the world's #1 reserve asset for the first time in history. That's why central banks bought more gold in the last 3 years than at any point since the end of the gold standard. That is why something called COMEX, the Gold Futures Open Interest, which measures how much paper trading is happening, just collapsed to its lowest level in 13 years. Those two things have never diverged like this in 40 years of data. And it's because one way or another, the physical market is going to be taking over. Just like the Bank of International Settlements said it would in 2021. Just like the rule change was designed to allow them to do so that they could protect themselves if gold ever went up. The question is,